Welcome to TradeTheMBI.com. This is John. This report is for the 29th of September, end of the month. And, well, it's funny because I think it was, October it started all the way at the beginning of last year. The market was way overdone, was going to collapse, and then we just kept climbing and climbing. And now it's reached the point where everyone says that it's absolutely, this is it. And yet we still keep making new highs because, relatively speaking, in a growing economy where you can't really put money in a safe spot to earn anything, what are you going to do? You're going to fight inflation by getting a negative return? Not likely. So we do the slow climb. And this is what we talked about. It's just a little bit further and further as you have to factor in what inflation is going to do to the value of a dollar over time. And there's no question that that's coming with pro-growth policies. It's built into the equation, and for those that understand the equation, this is why we've seen the market rising for the last, 8+ months since the election, because there's a recognition when you shift from no growth, low growth policy to an actual robust growth, you're going to get asset deviations, just that they're going to, some rise a little faster than others. From our reading standpoint, though, nice reset of the DOC, meaning that we've reached, in this consolidation, what we would call an oversold setup. Don't quite have the shakeout moving positive here for the NASDAQ. Go back to the ES and look at it. You can see we've stayed positive. Brief little dip right there, but it turned around immediately. We didn't get a full reset of the DOC with the orange coming underneath. It got very close to it. We saw it happen on intraday charts, and the fact that we've also seen the red cyan, the cyan from the shakeout and that rising indicates that we could be, thick in it. We're still in the negative, so it hasn't reached a positive. Usually when it gets to positive is when you would be considering that you've sort of run the length or the gamut of the entire run, but hasn't quite reached it. Euro's still trading in this elevated range, and as long as it does so, it's going to also support the extreme prices of the, I'm not even going to call them extreme because it's not, it's relative to the time. And to call it extreme, I think it's just confuses things, and it may cause you not to take advantage of trades that exist. Plus, it's also forced a lot of people into a short bias, which I think has been a huge mistake. Here we have the TLT continuing to retrace, and again, we've had that 120 target for quite some time, and we've had buy signals that have deviated from it, and it certainly has. And every time the shorts have come in, been fairly decent, though a little bit lopsided. And I think the realities of the potential tax cut, things like that, really would put a lot of pressure there. Oil made new highs, but then faded back into it. That's not a surprise. We had the positive extreme, and all it did was refill that positive extreme right there. And at this particular point, moves right into a little bit of a short configuration. Short-term buyers in that resetting, but it may have gotten a little ahead of itself. You've got to have some more data to back it up, but the reality is you ended up with over 3% growth. Whether that's continuing going into the next quarter and stuff, we'll see. But so far it looks fairly decent. Gold not completely responding to it just yet. I think that's going to be a little bit of a back and forth. We like this dip opportunity as a entry point when we get proper signaling from it, and I think that there's still potential. We expected when it popped here that we would retrace that, given the dip below the red line right there, and I think it's done exactly as expected. So go figure that. Real shocker, huh? Not that big a range for the day in the sense of volumes, because look at how small that is when we compare it to some of the bigger days. But literally what we did was fill back in from the rise and then just come back to it. Now the fact that we didn't take it out, it shows some weakness. It just shows that there's a point at which the buyers get tired and then they want to take some of the gains. Not surprising, but solid buy signals that came through there. I mean, it just isn't a big range. 5 or 6 points is about the best you're going to get, even with the signals coming in where they are. Just that's the reality of the lower volatility at this particular point. We would expect that here going into an end month and then the beginning of next month, new flows should be real exciting for October. So I think that's kind of a fun one because you have the mystique of October combined with people thinking extreme valuations, and you're going to be hearing crash talk probably for the entire month, all the way until we get to the 29th. But that's okay because we'll see it with the indicators. Those will be going out for this weekend, and we'll have all the updates with them as well. So as always, trade well. We'll talk to you later.